everyone, it is Evan here from the Trade Risk on Friday, August 10th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. We're going to jump right into the charts here with the S&P 500 weekly time frame. This is where we like to start our analysis. Each bar on this chart represents 1 week worth of trading, and we can see here the S&P 500 this week broke was going on a 6-week winning streak. We ended up closing the week in the red, down just slightly, about 0.25%, 8 handles here in the S&P 500. But if you zoom in and look at this week's candle, you'll see the long tail here on the top and the close near the lower end of this week's range. Most of that selling coming in on Friday to close out the week. So when we look here at this weekly picture of the S&P 500, we've been grinding higher here for the past 4 months, really since April, back up towards the all-time highs that we made in January. Notice the trend here, nice and smooth throughout 2017, really started to get frothy and accelerated as we came into the new year. We had that big drop, 2-week drop here in January. The market kind of fumbled around, did a little double bottom, higher low, and then we've been grinding higher. We got a bit of a reversal here. We never tagged, we never got to new all-time highs on the S&P 500. Doesn't mean they can't come next week or the week after, but we didn't achieve it this week after trying to grind higher to start the week, and ultimately we did pull off and close below last week's close and below 2 weeks ago's high. So on the weekly chart, we are still holding up in a grind higher in this trend, in this channel, this longer term channel you could draw, and at this point there is still no technical damage to really speak of. We got an outside reversal week. We want to see next week if we get any follow through to that. Do the sellers kind of step in and continue the selling into next week, or is this just kind of a simple pullback as complacency was getting pretty evident out there when looking at some different metrics. So that is the S&P 500, and still very importantly holding above that 2,800 level. So if we go down to the daily chart, we have a little bit of a closer look here, and the trading earlier in the week. So if we took Monday out of the equation, we had a little bit of a range here on Monday. We're up 35 basis points. I mean, that is a quality range, I guess, for this time of year. But when we look at Tuesday, Wednesday, and Thursday's session here, very, very narrow range in the S&P 500. Of course, that doesn't tell the whole story. There are plenty of individual stocks that are moving 3, 4, 5% plus. But as a collective, as the aggregate here, as the major average, as the S&P 500, we could see things really just dried up, went very quiet and kind of a sideways lull, sideways grind until Friday, where we had a bit of a spike in some volatility. We saw the VIX up 20%. We'll look at that in just a little bit on Friday alone. But we saw this knee-jerk kind of gap lower and really breaking below the prior 3-day lows. So Tuesday, Wednesday, Thursday's lows were taken out on this morning's gap lower, and we fell below the highs here, the pivot high from Wednesday the 25th. So for me, when I look at the S&P 500 now, we're in kind of a short-term break of support, and I would want to see this market back above 2848 or so to really repair that short-term momentum. Again, this all depends on where you stand and how close you're looking at markets. If you're a intermediate term trader, you're looking at that weekly chart, you don't care at all about the noise here because that's exactly what it would be to you, is just noise. But if you are a short-term active trader, this could be a potential actionable kind of day one breakdown signal for a aggressive short down to, say, the bottom end of this range around 2,800. So it really depends on how you want to look at this, but at least on the daily chart, there is some short-term damage here. We had this break, no no attempt to fill the gap, or we were not able to fill the gap today. We really kind of probed lower throughout the session, didn't quite close at the lows of the day, but certainly not the most bullish close here for the S&P 500 bulls. So for now, I would say in the very short term for you active traders, we get a little bit of pressure here in the S&P 500. We have this gap down. As long as this gap and the longer this gap stays in place, the longer we stay below this 2850, call it, level, the more sort of pessimistic I would become in the short term to at least kind of come back down and probe, say down to this 2800 level where we found the buyers show up just a week or so ago on Thursday the 2nd around this 2800 level. And if we don't get down there, then certainly, you know, it's on the bulls to put in some type of higher low here. If we look at the S&P 500, the SPY ETF, you know, you get a couple of different ways you could sort of view this. You kind of have this wedging action going on here. You got this trend line if you want to extend it from the July lows here. It's essentially where we found some support over here on the 2nd on Thursday around that 279.50 level. You can see we're just above it now. We got the highs up here, which we've hit now 2 or 3 times if you extend it from the June highs here. So we got this pattern at work that could see some expansion if we start to move outside of it. If you're a fan of that, I personally like to put a little more reliance on the horizontal levels myself, where we found pivot levels or inflection points in the past. So this is essentially the range I'd be looking at, but certainly this trend line here is something I think people would be eyeing, as well as the S&P 500 almost got down there and tested it on Friday's trading. So that is the action there on the S&P 500. Levels to pay attention to: 2800 on the downside, 2850 on the upside, and then you ultimately have these prior highs up here on 2862. So we'll see if the sellers can get some follow through next week, but as it stands now, we got a short-term breakdown here, and we have an uptick in volume, and we will see if the sellers can continue that next week. If we go to the IWM next, this was the most resilient market here. Major average today or on Friday and this week. This did finish up 68 basis points, almost 1% on the week, and it is holding ground here. Remember, it never broke out. This was the first to sort of go sideways here and kind of reluctantly chop around, and it's still not out of the woods yet. It's kind of a coin flip, anybody's guess at this point. The pattern is tight. It's been moving higher in this short-term channel over the past 2 weeks or so, and we do have this horizontal level around 166.50 or so. I would say Wednesday's lows are going to be pretty important. If we start to roll over below this 166.50 level, I would have to imagine some aggressive sellers and some stops are going to start to run here, and this market could start to spill over. But that is only if we start to break down below this 166.50 level. It's only about $1 or so below price. You know, ideally, if that comes in with some volume, that seems like an actionable signal again to jump back on the short side. But until and if that happens, we will see if bulls can continue to hold this up and continue to chop sideways and hold up, while perhaps some of the larger cap areas of the market feel some pressure this time around. So Russell 2000, best house in a tougher neighborhood this week. And we go to the Nasdaq 100, which did suffer, again, some a pullback here, a short-term breakdown on Friday. Still managed to close the week in the green. We can see a tail here on the top end of this week's range, and you can see again we never really got back up to test or take out the old highs here back on the 25th, on Wednesday the 25th. Remember, we got up here to about 182, almost 183 or so. We had the gap down, we had this pullback, and then we've grinded higher here. We jumped in on the short side here on Friday for the Nasdaq 100, so we do have an active short position in the Qs right now, and the setup that I'm looking at is essentially this retest where we got this reversal here on Thursday as we tried to get back up to re-challenge and test the Wednesday 725 highs. We reversed there. We got the follow-through selling today. We did not close at the lows. I would have preferred a better, a more bearish close here, but we did get the uptick in volume. We are getting the divergence here in momentum. So if we look here at the MACD, we're kind of got back up and retested this high here on lower momentum. And if you were to look at the advanced decline line on the Nasdaq specifically. I know this is the Nasdaq 100, but if you were to look at the Nasdaq composite, you can see that hasn't quite broken out. We get a similar kind of divergence here, negative divergence on breadth on the cumulative AD line for the Nasdaq specifically. Don't look at the NYSE, look at the Nasdaq, and you will see that. So for those factors combined, we got momentum divergence there, we got a little bit of breadth divergence, and we got the inability to sort of take out these highs here with the volume move breaking below these 3-day highs and below this little band of support, prior resistance. That was enough of a trigger there for us to jump into a short trade here with a target down to around this 177 and change, 178 area as sort of a first target to sort of reassess, not trying to pound the chest and look for some home run, grand slam, you know, short collapse, apocalypse type of market pullback. I know people's opinions are quite strong right now on both sides of the fence on whether or not this market can continue higher, or if we're, you know, on the you know, cusp of a 20-30% correction. That's not what this is about. Simple price action setup, and I will happily step aside from this position if we start to take out, say, 182.50 or so. That is approximately where the stop loss lies for our trade. So have a short position here on for the Nasdaq 100. Like to see that continue lower next week, and hopefully hopefully this one works out for us. So that is the market environment overall. I get some more mixed signals, but certainly a little bit of life and a little bit of a knee-jerk reaction here to finish out the week. And we will need to see next week now if the sellers can capitalize off of this move, off of these breaks of short-term supports, or is this proving to just be a little bit of a fake out here and we are off to the races as dip buyers step back in off of this one-day pullback. So that's what we'll be watching for next week. Let's look at some other markets now. We'll go to TLT next, which was getting some love here into the end of the week. Saw some volume come in here and bulls really breaking above this range here made at the end of July. If we look at the weekly chart, nice candle here as we took out the prior 2-week highs. Still sideways overall in a channel that it's been in since the beginning of this year, but you know, a good kind of arrival here by the bulls to kind of put in some structure here and take out some of these prior highs. We'll need to see if they can keep that pace, keep that momentum into next week. If we look at oil next here, you can see it did finish lower on the week, minus 1.33%. Briefly took out last week's lows, but then did recover them. And you can see this one here looked like it was ready to sort of roll over, particularly on Wednesday's session, but it did stabilize here into the end of the week, and it's really kind of you know, making it hard to play this with any type of real momentum or conviction. This level now seems to be pretty important here. This 1384 in the USO ETF. It was the lows here from July. It was the lows here from just Wednesday. So if we start to roll over, maybe we get another day or two of bounce, roll back over under this level, that looks like a kind of nice momentum, kind of stop run breakdown level for you active traders there. If we look at natural gas, this did get a nice bid this week, 3.4%, third week in a row now that we've seen some nice gains come in here, and it is up approximately 10% in the past 3 trading weeks, and it's challenging these June highs again. So if we go back to this daily chart here, you can see we're basically where we topped out just about a month ago back here, a little over a month ago, back at the end of June, and we are back there with some volume starting to come back in. Tough to chase it here, tough to buy into these old highs. Really want to see this stabilize, set up, maybe move sideways at this resistance and then break out. That'd be a nice scenario, but certainly markets tend to not make things too easy. So perhaps the squeeze continues here in the short term, but the bulls are in control there in at least the short-term trend for natural gas. And if we go to the metals, we are still moving lower here to sideways. It is getting tighter. It is getting a little more reluctant. Take a look here. For instance, at the MACD, you got the MACD, which is our momentum indicator that we're looking at here. You can see as this continues to rise, it is in negative territory, of course, so it does say that it's not something to be too excited about here, but we are getting kind of positive divergence as this climbs higher. We have price that continues to inch lower here, so that's not necessarily necessarily a buy everything, load up the boat signal in itself, but it is something that should tell you that, hey, maybe there's something here to pay attention to if it sets up in a setup or strategy that you prefer or you like to trade or that you have confidence in. Then it would be an interesting sort of reversal trade, mean reversion type of trade there if you are active and if that fits your strategy. So that's something to look at, but structurally downtrend still persists here, and we are waiting on more sort of price confirmation that a bottom is in place. Silver is not breaking down. We've talked about this. I do like this. It has my attention that at least it's not breaking down, and you can see here we got the MACD again that is trying to inch higher here, indicating that there is some positive divergence going on here. Again, price action has not broken down from the July lows here. If we started to squeeze above 1460 or so, maybe again there's some nice reversal trade, there's a nice reversion trade there that you could get 20, 30, 40 cents out of. But for now it is still kind of sitting here lingering, and we will wait for some price confirmation to see if we can get a better trade set up here in silver. So that is I think that covers everything as far as major markets go. Let's go to our individual sectors now. Let's see what moved this week. We sorted it by the weekly performance, and if we look here at the strongest sector this week, it was the discretionary ETF XLY. It did certainly pull back here on Friday, and you can see it's at kind of an interesting spot right now. So we have this trend line that extends from the April lows that has really guided price higher over the past 4 or 5 months, but notice now we're getting a bit of a sell-off into it. We briefly undercut that level here on Thursday of last week. You can certainly refine and draw this line a little more fit if you prefer. This is not meant to be a a precise trading line that you want to be overly analytical about, but it's certainly a guide here, and you can see we're back to it, and we did lose now the highs here from July. So if you're betting against, if you have interest in betting against the discretionary ETF here, you kind of have a loss of this horizontal level here. You got momentum that has been kind of winding down as this has been grinding higher. You lost this horizontal level, and you're challenging, say, a trend line or a general slope at which this has been rising. So kind of a confluence area. If we start to accelerate lower here on volume, that would certainly be a bearish scenario, and maybe would signal that this trend that we have been in for the past 4 months is changing hands. So XLY was best in class. Again, this is still the best performer this week, but we want to pay attention to the lows here just below where it's currently trading to make sure it doesn't go off track and start to break that trend. Technology here, number 2, was up a little less than 0.5%. Looks similar to the Nasdaq 100. You could see here that once again we did not quite get back up to the highs made from July 25th. We got close to it on Thursday, we reversed, and then we saw this thrust lower here on Friday. So again, a little bit of a MACD divergence there, slightly, just because price didn't get all the way back up here either, but it's something to pay attention to. And the Qs here, and this is probably holding up a little bit better. I like this a little bit better than just the Qs outright. The XLK is holding up slightly better here, and we'll need to see if this can continue to hold up next week. Don't have too much of other opinion about it except for this 72.40 level. If we start to lose that, then I'd get much more pessimistic. XLE third here, just finished slightly positive on the week, but really nothing to say about it. We did get a nice high volume kind of reversal day here on the daily chart, but it's still in the middle of nowhere. It's moving sideways here, consolidation. So for me, I think XLE will set up to be a trade, but certainly nothing. I don't see anything interesting just yet. It probably needs a few more weeks by the looks of it, and until then, we're just gonna loosely keep an eye on it. On the downside, we had staples. I believe this was the top performing sector last week. This has been on a very impressive run. If we look here for the past couple of months, it has retraced quite a bit of the early selling from this year. It's been moving higher in this channel. It ran right into 54.50 or so, which has been a prior inflection point. There's a lot of supply traded in at that 54.50 area. It ran right into it. It reversed, and now it's back into the lower end of this channel. So if you believe that the safety trade, the staples trade is still on, then you're probably looking at this 4 days down onto this lower trend line as a potential bounce spot. If you are on the other side of that trade thinking that this has to break, then certainly you'd want to see again more selling kind of come in here and that trend start to break. For me, I wouldn't really be betting against it. Probably be looking more interested at a dip buy around this level, but only if you're tactical. Materials, second worst here on the week, down a little over 1%. Much like XLE, though, this is really in no man's land. It's in the middle of a ton of chop here. Things are sideways. Momentum is just kind of flatlined here. So for me, XLB is just really not interesting whatsoever. Industrials, on the other hand, this was the also down a little over 1% this week, and this is a little more of an actionable area. We ran right into this. We talked about this last week as this came into this this prior supply area where it has failed multiple times in the past. We talked about, you know, the risk to rewards of chasing this up here is probably not ideal, and sure enough, we did get kind of a lower high that got put in on Tuesday. We rolled over, and then we're breaking below the lower end of this channel here that we've been rising over the past multiple weeks. So XLI looks like a bit of a thrust lower here, kind of breaking this pattern, and certainly at this point it's on the bulls to try and stabilize us here. Not too interested for me one way or the other. If you're aggressive, you're probably shorting this and looking for a move back down into the 73 range. So that is the recap for this week. It was a very quiet, dull week for the first half, and really pretty much 4 days of trading was dull, and then we had a little bit of fireworks here towards the end of the week. Gives us something to gives us something for both sides of the camp, really, for next week to see which way this pendulum wants to swing. So hopefully you guys did okay navigating this market out there. It is dull, it is quiet, it's choppy, so be careful out there. But risk can happen fast in the summer months, so be mindful of that. And I think that's all I have to do and to rant about. So thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel to stay up to date with all of the latest that we're publishing every Tuesday and Friday for the weekend, for the weekly or the daily recaps for the market. So thanks so much. Have a great weekend, and I will talk to you guys next week.